Hello, welcome back to the channel. Today another exercise case on value-added tax and let's just begin. So we have now entrepreneur K from Kassel, that's in Germany, and he takes part in a trade fair in Vienna, Austria. And during this trade fair he desperately needs some furniture for the exhibition area. So he orders his furniture from an Italian trader by express delivery to Vienna. He acquires the furniture under his German VAT number as he does not yet have registered for an Austrian one. Price of the furniture is 30,000, and what are the consequences for K, the Italian trader? We had already discussed similar cases, so this should be easy. Let's think about what happens here. So first we have trader E from Italy. He is the deliverer. K from Germany is a customer. Furniture is sold and for 30,000, and it goes from Italy to Austria in Vienna. So that's an internal cross-border delivery within the EU. So we have to apply the rules for EU internal delivery cases. Our first question must be, as always, is the customer an entrepreneur? And the answer is yes, he is. So then we have the solution intra-community acquisition for the customer and intra-community delivery for the supplier. So let's now deal with the two sides of the matter. On the side of the customer, we have to check if the customer has an intra-community acquisition. So 1.1 number 5 has to be checked. Number one, yes, the furniture goes from one EU state into another, Italy to Austria, so fulfilled. The buyer is an entrepreneur, yes, K is an entrepreneur. Number three, the seller is also an entrepreneur and is not a small entrepreneur, yes, is to be assumed. So it is an intra-community acquisition. The place of acquisition is under 3D sentence 1, where the transport of the good ends, that's in Austria. But additionally, because he uses the VAT identification number of a wrong state, or not of the state of destination, additionally also taxable in Germany. So we have the strange result that one event happens for VAT at two locations, namely in Austria and in Germany, so taxable in both states alike. The tax exemption for B, not liable to tax. Tax base is again 30,000, the net amount. Tax rate in Austria, the Austrian rate and tax, Germany 19%, so 5,700. Then taxpayer is the acquirer, that's K. The tax arises at the moment when the invoice is issued, at latest at the end of the first full calendar month after the delivery was made. Invoicing details do not matter for the acquirer. He doesn't write an invoice. Declaration duties exist here in Austria and in Germany due to the double taxability and peculiarities. Once when the K buyer from Germany can prove that he declared and paid acquisition tax correctly in Austria, he can have his German tax declaration changed and adjusted, and then the German tax liability falls retroactively away. Can we claim input tax for the Austrian acquisition tax? It can be claimed. In Germany it cannot be claimed because the acquisition tax in Germany is not a tax paid for the acquisition of the furniture, but paid for the error with the number. And for such reason there is, or for such a tax, there is no entry in paragraph 15. Especially, it's not a tax under paragraph 3D sentence 1, but sentence 2, and 15.1 number 3 only grants an input tax refund claim for taxes due under sentence 1. So that's it. Now let's look to the deliverer, the treatment in Italy of the Italian. Number one, the delivery exists here. 3.6, the place where this delivery has to be taxed is at the place where the transport of the good towards the customer begins. That's Italy. So it's taxable in Italy. Is it tax-free? And the answer is, well, is it an intra-community delivery, although the customer uses the ID number of a wrong country? And so we have to test 6a. Number one, the good goes from one EU state into another, fulfilled. The customer is an entrepreneur, fulfilled. The customer is subject to acquisition tax in another member state of the EU. Yes, at least in Germany, he will have to pay acquisition tax. There it must be detected due to the use of the German number. And 6a, number 4, the customer has used the VAT identification number of another member state. That's fulfilled. He used the German number, and that's not an Italian one, so of another member state. You must note here that the law does explicitly not demand that the VAT number which the customer uses is issued by the correct state. It is definitively and clearly said the customer has during the transaction used the VAT identification number of an other member state, so of any. And so this condition is also fulfilled. So for the Italian, it qualifies as an intra-community delivery. So the whole thing is tax-free then under 4, number 1, letter B as an intra-community delivery if the declaration modalities in the recapitulative statement are correctly done. The tax base is 30,000. The tax doesn't exist because it's tax-free. The taxpayer is the person who does not need to pay tax here, but have to give proofs for the tax exemption and hand in the tax declaration. That's the Italian supplier. See paragraph 13a, number 1. The invoice must be a net invoice, must explain that it's tax-free, and must give the ID numbers which both parties used on the invoice. Recapitulative statement must be handed in where the supplier gives to its fiscal office in electronic form the net amount and the VID identification number of the customer so that an automatic communication can be started with the fiscal office of the customer so that the acquisition tax there can be not forgotten. And another peculiarity will be that once our customer K has finally registered in Austria and has received from the Austrians now a valid Austrian identification number, that then he will communicate that to the Italian in order to end his additional punishment tax in Germany. And so the Italian will have to correct the original invoice, replace the German ID number by an Austrian one, and everything's then fine, and has to correct naturally the recapitulative statement. Last but not least, the Italian has a tax-free delivery. And then we have again the question with the input tax, and the simple answer is, although an intra-community delivery is tax-free, the deliverer nevertheless keeps the full right to deduct input tax for his own raw materials and others related input, as you see from paragraph 15.2, number 1, and 15.3, number 1. Well, that's already everything to this small little case. So that was a very quick one today. Thank you for watching. Goodbye, and till next time.